Hello and welcome to Heartofeconomy. Before we dive in, remember to subscribe to the channel and hit the like button to grow your investment mindset and take one more step toward financial freedom. Turn on notifications so you never miss an opportunity and can follow developments instantly. Today, we are not just going to look at the price of gold, because right now, the steps China is taking are signaling a deep system change that will completely affect the future of the dollar, the role of gold, and your investment strategies. We are living in a period where gold is no longer just an asset to set aside during crisis. It is on the verge of becoming the backbone of global trade. At the center of this transformation are China, the upcoming BRICS 2025 summit, and a silent but powerful strategy. Gold-backed Yuan replacing the dollar. China has long wanted the yuan to be used more actively in global trade, but this time it is not just a wish, it is a reality backed by infrastructure. With the BRICS summit set for July 2025, China is preparing to announce a gold-backed yuan-based trade system. The essence of the system is countries will pay with the yuan while holding gold as collateral. Trade transactions will be secure without needing the dollar. Oil and commodity exporting countries will reduce dependence on the dollar. A network of gold vaults will be established under local control outside of China. These steps represent a silent yet deep revolution aimed at eroding the dominance of the dollar in global trade. China's strategy is a clear move to restructure global trade chains dependent on the dollar and U.S. treasuries. This is not just a central bank policy. It signals that global finance is starting to be reshaped with new rules. From crisis asset to system asset. Until now, gold was considered a safe haven asset during crisis. But with China's move, gold is now becoming an active collateral instrument for global trade, an alternative to the dollar, a shield against inflation, a system component that supports financial sovereignty. Gold is no longer just a commodity to trade by price, it is being redefined as a security instrument that will keep global trade functioning. Insights from financial experts. Jim Willie. China's move ahead of BRICS 2025 is initiating a transitional period where gold becomes the backbone of global trade, quietly dethroning the dollar. Danilo. Gold is no longer just an asset to be set aside in time of crisis. It is becoming an active tool that will ensure the security of trade. Dalio. Gold is the strongest asset that can protect real value during an era where governments can print unlimited money. China's move to back the yuan with gold has the potential to undermine the dollar's reserve currency status. Lyn Alden. Gold-backed systems help global trade operate securely while providing strong protection against inflationary risks. These perspectives clearly show that, as an investor, you need to focus on more than just short-term price movements. What to expect at the BRICS 2025 summit? At the summit scheduled for July 6 to 8, 2025, we expect the official announcement of a gold-backed yuan-based trade system, the launch of China-supported gold vaults in BRICS countries, the implementation of dollar alternative payment systems in energy and commodity trade, pilot programs transitioning to non-dollar reserve structures. These developments will not immediately transform the system, but they will gradually reduce the dollar's share in global trade and increase the structural demand for gold over the next 5 to 15 years. Gold prices have been volatile in the short term, recently dropping below the 50-day moving average. This can be confusing for investors. However, Jim Willie states that these price drops are a collection period for central banks and major funds. Danilo emphasizes that understanding gold's new role in the system is more important than focusing on price movements. Dalio points out that gold is the strongest tool for protection against inflation and monetary expansion in the long term. Lyn Alden notes that despite volatility, gold will continue to be a safe haven in the long term. What this process means for investors. In the short term, you can view price pullbacks in gold as opportunities to accumulate for the long term. In the long term, you should position gold not just a crisis asset, but as collateral for trade and a system safeguard. Portfolio management, allocating 10 to 20% to gold and potentially silver and platinum for strong diversification and risk management will be wise. Financial literacy, understanding this shift will enable you to make solid decisions without being swayed by sudden news cycles. What will the new financial order bring? The quiet decline of the dollar's dominance in global trade. Gold becoming an active collateral instrument in trade, building trust in trade transactions, providing safe liquidity while reducing inflationary risks, increasing structural demand for gold and supporting long-term prices. Jim Willie describes this process as rewriting the definition of money. Danilo emphasizes it is a transformation where investors can protect themselves by reading the direction of the system. In this period, where the dollar's dominance is being questioned and gold is being positioned at the center of the system, the greatest power is accurate information. Investing in gold today is not just about targeting price increases, it is about understanding the global system transformation to protect yourself and prepare for future. Understand the new role of gold, prepare your portfolio for the future, increase your financial literacy, evaluate opportunities with discipline. If you found this video valuable, don't forget to like and subscribe to strengthen your financial journey.